Hello everyone, my name is Lawrence and thank you so much for watching my channel. A channel talks about investing in the stock market and also talks about financial independence. If you're new to this channel, please consider subscribing such that you don't miss other videos like this. First of all, since we are still in the new year 2021, I can't go ahead minus wishing the best and prosperous new year 2021. For today, I'm going to be talking about one of the best topics you should be watching if you're interested in Kenyan Securities Exchange, because I'm going to be talking about the best and the worst performing companies listed on Kenyan Securities Exchange in 2020. And I will be dissecting one by one what we should do or what I'm going to be doing with the companies that performed well or performed poorly. So let's go direct. Actually, the article was written by an online publication, Kenyan Wall Street, which actually writes about investing world over, but mainly is focused on Kenyan Securities Exchange. So let's go dive to that article. I'll be listing mostly the top 5 best and the top 5 worst performing. I'll also be talking about little by little about the reasons why they dropped or they performed well, and also giving you my views whether I'll be buying them or selling them. So let's go direct to the article. So it says the best and worst performing stocks at NSE, that is Nairobi Securities Exchange, in 2020. So I'll go direct to the list and we'll come back to the reasons. So number 1 best performing is NBV, that is Nairobi Business Ventures. It appreciated by 490%. So its market capitalization, that's 2.15 billion. That is this carb, it means the carb acid. Mainly this is it deals with selling of industrial gases and domestic gases. This one actually didn't tell you what it does. Nairobi Business Ventures, before it was dealing in shoes. It used to have a brand called K Shoes. That's a Kenyan brand shoe. But now it was taken over by another company that is dealing in cement. So I will talk about more about these companies. So this is a new gold ETF. Yeah, this is a new ETF. It deals with selling of gold. That's why it appreciated. If you remember, actually gold appreciated very well. Actually, it's very simple. When the economic times are very bad, people run to gold because it doesn't depreciate much. That's the reason. So IGAD, actually this one deals with agricultural commodities, mainly tea. And you know, during the bad times, people tend to drink a lot of tea. I believe that's the reason. And also the Everready, this EVRD, this also deals with home consumer goods, mainly batteries, car batteries, bulbs, detergents, and also the small batteries for the small radios and also the torches. So these were the 1, 2, 3, 4, 5. These were the top best performing companies. And as you can see, actually, apart from these 3 companies, the rest did not perform well. The 6 was Safaricom. So basically, these are the 5. Let me go to the worst performing companies. Then we can go into much deeper into this is the worst company. This is Scan. Actually, this is called Scan Group. The Scan Group, mainly it is a telecommunication, and also it's a telecommunication it's communications and advertising agency. So this one, actually, if you remember, because actually many companies did not have much money to advertise, and also they do the communications advertising. That's the reason why it went this far, 65%. The second worst performing company was the Nation Media Group. Nation Media Group, basically, it is all about in East Africa. It mainly deals in publishing, media, and also it has radios. So basically, that's what it deals in. This is XPRS, it's called Express. So Express also actually this company mainly deals in transportation and courier services. It's evident that actually Express and courier and transportation was one of the greatly affected industries. The fourth worst performing company was Bamboo. This is the ticker symbol. Actually, this one is Bamboo. Bamboo Cement. It deals in the cement industry, and actually construction also was badly affected. So the reason of 52%. HFCK. This is Housing Finance Bank. Basically, you can see actually most also the banks were badly affected. You can see it lost 45%. Of course, in previous also it has not been doing well, but also it was affected heavily also. So you can see these are the top 5, 1, 2, 3, 4, 5. If you go ahead also, you will see cables, FTGH, Centum, KPLs. So you can see most of the companies were affected heavily compared to the positive side, mainly because of COVID. You can see also the banks, all the banks were affected by 32%. But as I record now, some companies have recovered to even 20 to 30%. So this was as of 31st December, remember. So basically, these are the top 5 worst and the top 5 best performing companies. So let's go direct to this Nairobi Business Ventures. The reason why it appreciated by this much, actually they went ahead and wrote about this company. They say Nairobi Business Ventures share price shot by more than 490% during the year, not driven by any solid fundamentals, I agree with them, but due to restructuring exercise that included a share split allotment and issuance of shares to Delta International, FZE. So basically what they are saying, Nairobi Business Ventures was bought by this company, Delta International, that deals in cement. So let's go ahead and read. Shareholders approved to allot and issue up to maximum of 415 million ordinary shares of Kenyan shillings 0.5 each to company, to Delta International, subject to payment of aggregate subscription price of 83 million, being 2 per new share. So mainly they paid this much to buy the company. So Delta International now owns 84% of the issued share capital of the company, with the new shares credited as free paid to rank at the same rate as existing ordinary shares. So basically, in simple terms, this Nairobi Ventures was taken by Delta International. So if I am the owner, because I don't own this company, personally, I would sell the company if I had bought it, because before it was around even less than 0.6 Kenyan shillings per share before it was taken over. So it would be a great profit if you sold it at the current price. Actually, it is about 4.6, which is a great price. So if I owned it before, I would sell it to recoup those the profits, and also buy better companies, because I don't believe this is fundamentally good company. So my personal choice would not, even if you're planning to buy it, I would advise that you wait and see how the company is going to be, because if you go to fundamentals, its fundamentals, they are not good. So personally, I wouldn't advise anyone to buy this company. At least a period of 2 to 3 years, you see how the direction it is going to take. So that is what was the first best performing company. Another one was Abisa New Gold ETF. ETF is exchange traded funds. So this one, it appreciated by more 34. Mainly these exchange traded funds deals in gold. And as I told you, during a recession, during bad economic times, many people run to gold to buy it, because it is considered to be a safe commodity because it doesn't depreciate fast. So that is the reason why this ETF appreciated, because gold went as far as actually 2,000 and above dollars, so which is good. So personally also I wouldn't be buying it, because now as the time is getting to normal because of the vaccine, so I believe actually if you have been following gold prices, they have started to go down slowly, which I believe they will go they will continue going down. So personally I wouldn't advise buying during this time. You have to wait and see how things will go. So I wouldn't advise anyone to buy this ETF. So what was the third company? Was carb acid. So carb acid, actually the main reason why it appreciated was because it is actually they have also here, they are talking about it, carb acid Investment PLC with a market capitalization of 3.10 billion was among the top price gainers in 2020. Its share price was appreciated by more than 43% over the past year to stand at 12.5 when trading on 20th December. So available data on carb acid share performance shows that the counter, which has 254.8 million shares, has seen its price at the bourse appreciated by 51% over the past 3 months of the year. Carb acid stock rally was driven mainly by the announcement of its intention to acquire BOC, a listed oxygen dealer. So basically the reason they are giving you the reason why this share appreciated, actually before it was the current around 7.58, it was trading between 7 to 8. So they had available cash of about 2.1 billion. So they have an intention to buy this BOC. BOC also, this is a Kenyan company. It also has branches in Tanzania. It also deals in industrial production and also distribution of oxygen in East Africa. So that is the reason, because they anticipated it is a good deal. Personally, yes, it is a good deal, but at this price of 12.5, personally, I would wait for 1 year or 2 years to see how the deal will go, because actually this is not concluded. It is a speculation, and it's not always good to buy a speculation. As you may be aware, like last year, Equity Bank was proposing to buy banks, but at the end of the day, it did not go through. So if you bought Equity Bank on speculative sentiment, you lost it. So that's why I'm saying it's not good to. If you want to buy, I would advise wait for it to buy this company. If it buys it, it will be a good deal. But still, at this price, I don't believe it's a good price. Just wait. I believe it will come down after people have settled down, and also after buying this company, I will believe it to be a good deal. But firstly, wait for the company to first acquire this company. If it acquires it, it will be a good deal, because it will be like a monopoly of distribution of gases, both oxygen and carbon dioxide. So this is also a company to watch in 2021. But as of now, I'm throwing it, but I'm not buying it at this price, because I believe it's slightly overvalued at this price. So that was the third company. So what was the another company that appreciated? IGAD. IGAD, there is nothing much that made it appreciate, but as I told you, people, of course, whether bad or good times, people will always drink, people will always eat. This is a consumer company. So that's the reason basically why it appreciated during, because the tea prices slightly went ahead, actually went above. This Everready, also Everready company, it's also it deals in consumer goods, batteries, car batteries, small batteries, and also lights, and also detergents like for washing. So it's also consumer good, which I believe that's the reason that led it to appreciate. But I believe Everready, fundamentally, if you watch its figures, is not promising. So basically, you have to avoid it. And also IGAD, nothing much about it. So I don't actually, personally, I don't buy agricultural companies, because they fluctuate so much. So I don't If you have enough information about IGAD, you can go ahead and read about it, because personally I don't buy agricultural companies. So this was about these top 5 companies. Actually, you can see the 6th company was Safaricom. Safaricom, actually, many people use the data transfer. They use the online. That's why it increased, actually, online transaction, mobile money, and also the calls. Basically, that's why it also increased. If you go to the worst performing companies, you can see Scan Group. As I told you, it is a communication and advertising company. Adverts and also communications. Advertisements, those ones were cut by most of the companies, because most of the companies were not advertising. They were not doing any communications because of the reduced revenues. That's basically the reason why it declined. And personally, I wouldn't also go for it. I don't believe it will go. It may recover, but it's not a good company to buy. National Media Group. Actually, in my last video, I talked about National Media Group, that I believe in its fundamentals, but at the current rate, it's trading at 15, between 15. Personally, I'm throwing it. If it goes back to 12 and below, I will buy it. But at the current 15 price, yes, I believe it's a good buy, not the best at the market, but if you're willing to go ahead, you can buy it, actually, because I believe it's undervalued. But personally, I would wait for it to reach at 12, because last time, actually, I also bought it at 10 and sold it at 18. So if it reaches back to 12, I will still buy it, because actually it's dealing in publications. Now the print media is not doing very fine, but they are doing very much to improve their digital revenues, but still they don't count much to its earnings. So basically, it's a good company, because its brands, they are doing very well. If you're in Uganda, you know, Monitor Publications, KFM, NTV, they have very good brands, but over the past years, it's not been doing well. But personally, at 15, it's if you're interested in it, I don't believe it's a good buy. It's not a bad buy. You can buy it at 15. But personally, if it reaches 12, I will buy it. But National Media Group is not a bad company, I can say. This Express company, disclaimer, I don't invest in any transport company, because the risk is higher compared to its reward. Because actually, for example, if the trailer makes an accident, it may take many years to recover that. That's why I don't invest in transport companies. Express, I don't believe it may recover that very soon. So if you're interested in it, you can check, but it's fundamentally, it's not a very good company. Bamboo, let's go to Bamboo. It lost 52%. Bamboo now, actually, it has recovered per se. By the time I was recording, it was about 30 something, 38. Bamboo, yes, it may recover, but it has a lot of debts. And in my other videos, most of the time, I don't encourage people to buy companies that have a lot of debts. But at the current price, 38, I believe it's not a bad buy. But compared to other companies that are available on the market, I wouldn't go for Bamboo. But Bamboo, I believe construction will go on, will continue. It's a fundamentally not a bad company, but not the best, because as I told you, it has a lot of debts, and most of the companies that have bad debts, they end up bankrupt. So you have to watch it if you're going to buy it, because it's a it has a very good brand, but when it comes to debts, and recently its production costs were not promising. So personally, I wouldn't go for it, because there are other promising companies on Nairobi Securities Exchange compared it to Bamboo. So let's go to Housing Finance Bank. Housing Finance Bank is also a banking company that mainly deals in mortgages. This time it is also being it is promoting the banking section, but mostly it deals in mortgages. Personally, Actually, it also declined. It had reached around 3.0 Kenyan shillings. Now it is improving. Now by the time I was recording, it was about 3.3. Personally, I believe it may recover, but it's not fundamentally. It's not a sound company. Personally, I wouldn't advise anyone to buy it because there are better banking stocks, better than this. But that is not to say that it may not increase. I mean, it may not appreciate. Basically, in these worst performing companies, the companies I would go for if I was to risk my money, I would go with the National Media Group and Bamboo company. The rest, I don't trust them. So actually, on the worst performing companies, you can see there are very many companies. Centum is one company that I personally own, and I'm still buying more because at the moment I believe it's still undervalued. At 17 Kenyan shillings, I'm still buying it. The more I get money, I'll buy it. When you go to Kenyan Power, that one has a lot of debts. You have to run away from them. But at the moment, it's appetizing. 1.7 Kenyan shillings, which is you can buy. Diamond Trust Bank, Equity, KCB, you can see all of them actually, they are good actually, because this Abisa, KCB Bank, Equity Bank, Diamond Trust Bank, there are many NCBA, these kind of companies, these banks. Actually, if you're interested in the Nairobi Securities Exchange, something that should do, the stocks that should interest you are the banking stocks, because I believe in them that they are going to bounce back the moment this situation ends. So basically, those were my views, those were my comments about the worst and the best stocks in 2022. So basically, those were my views. And as I always say, please make sure you make your own due diligence, make your own research before investing in any company, before investing in any stocks, so that you have a better understanding of what you're going to buy. Once again, thank you for watching. Have a good day. Bye-bye.